So today I thought I'd let you know that I've completely sold out of this stock. I sold everything. Normally I trim a position, but with this one I completely sold all of this stock, and today I'll go through the reasons why I sold this stock this week, and then I'll also tell you what stock I bought with that money. I put about 90% of the money that I sold from that stock into this position, and I'll tell you that as well today. So I hope you enjoyed the video. If you could hit the like button. We're close to 16,000 subscribers, guys. We're only about 70 short of it now. So if you are new around here, subscribe, and when you get me to 16,000 subscribers, I'll do a special live Q&A session on the Sunday. But apart from that, let's get started. Now, just a little shout out. I did drop my US portfolio for September 2024 on the Patreon. So if you are a Patreon member, go check that video out. If you do want to see the exclusive content from me, join the Patreon, only £5 a month, the price of a pint. You get to see 2 exclusive videos a week, and you get to know what I'm buying and selling in real time on there. And as well as that, obviously I'm not going to be posting on the weekend with any content, so you can keep up with some extra content on the weekend when I'm not here, because I don't think I'm going to make a video on the weekend. Next time you'll see me is probably on Monday. And as well as that, get some free shares on Trading 212. If you're new to investing or you're not using Trading 212, what you're doing, in my opinion, the best investing platform out there, and it's personally the one that I use. Join through the link in the description. You can get a free share worth up to £100. Well, let's get on to why you clicked on this video, which is what position did I sell and which position am I completely out of? Well, as you can see on the screen, it was Starbucks. I did sell all of my position in Starbucks. I had some concern. There was a few concerns I had. There was concerns around the valuation, the growth, competition, and then cost opportunity. Like I said, I deployed 90% of the money straight back into another stock straight away, and I'll also talk about that a little bit later on. We don't need that password right now. A little bit later on, so make sure you stick around for that. Now, Starbucks. So obviously the new CEO came in. I thought it was a good appointment. They took the CEO from AAA, which has been a stock that the market has loved. Since then, there's been a few controversies around the CEO. Obviously, there was the talk about that he's mostly going to work from home. He's going to take a private jet everywhere, that a few people were stirring up in the media. I mean, I'm sure he's got nothing on Taylor Swift with the amount of time that she uses her private jet. And also, what made me laugh the other day is he came out and said, "Oh, I'm going to turn Starbucks around." And I looked at the communication he put out to investors, and I was reading it, and I was like, this is basically saying all you're going to do is you're going to carry on selling coffee. Like, are you not going to talk about how you're going to go against the competition, what you're going to do different? Are you going to change prices? Are you going to offer new products? Are you going to focus on food? I thought you're just saying that all you're planning on doing is selling more coffee. But the market seemed to love it. I mean, yesterday the stock was actually absolutely flying. On the day the report came out, the stock was absolutely flying. It's had a pretty good week. But yeah, I did decide to close my position on Starbucks. Relatively short holding. I only held the position for kind of 4 or 5 months realistically. I had plans to make it a large position, but I was hoping the stock was going to stay in like $60 to $70 range for quite a while, and that's where I was going to build a position up. As you see here, the stock really only stayed in that kind of range for really a month, which wasn't long at all. So I didn't really get what I wanted to build up here, and that's where I feel comfortable buying. I think with this jump here, is a 32% jump is way too much for me in a short period of time, and I thought I'm going to take the profit off the table. And obviously, it's not a big gain, but I'll take it for 4 months holding the stock. Profit is profit. We're here to make money. And if it was a loss, like I said, it would be thrown in the comment section for the next 5 years, but it wasn't. We made money on it. The concern I had is around the valuation as well. You know, if you look here now, the company has gone up to 27 times earnings. Historically, the company normally does kind of trade around this sort of ratio. So it's already had like a valuation expansion. And with the valuation expansion, I don't know how much more it'll be able to get up there. And the big thing is, like, it's had this valuation expansion to what it normally trades at, but yet the financials haven't even recovered yet. So when you look at the latest report, for example, the financials are still down in the dumps. Like, there's no signs of recovery yet, but yet the stock price and the valuation and trading at a premium has already recovered. And I was like, there's a disconnect here. Like, unless, you know, the people that have an analyst in the stock market who has, you know, a lot better data than what we're getting has seen something that we've not seen, like, oh yeah, sales are starting to recover. I'm looking at the numbers, I'm like, this isn't a 27 times earnings. Like, the growth is still declining, the profitability is still struggling, and I just don't see it. And my other concern is, like, you know, competition. Is these poor sales because of the macro environment out there, or is it actually a competition issue? You know, you got the likes of Dutch Bros coming in here, and are they just taking market share away from Starbucks and that's why the sales are performing weak? Or is it just that people are spending less because of the weak environment? You look at Dutch Bros numbers, and granted it's easier for them to grow because they've got a smaller footprint, but they're growing 30% in a time where Starbucks is growing -1%, not growing, declining -1%. And the other thing is, the numbers are poor, but even historically these next year, the 6.9% growth expected. Historically, that's a lot less growth than what Starbucks normally does. When I've been in the stock market for like the last 8 years now, I've always had Starbucks as like a double-digit growth company, like 10%, 9%, even 8% revenue growth, and that's what historically they're normally done. Obviously, there's a few dips here and there, and maybe even better performances than that, but average I would say 8, 9, 10% revenue growth. If this is growing at 6% now, that's a lot lower growth, so you're going to command a lot less of a valuation, and this isn't a big moat. Like we're seeing right now, is this Dutch Bros kind of disrupting that moat? I don't know. And I just looked at this company going back up to 27 times earnings already, and I was like, it's just way off where I want to buy. I've made a quick, nice bit of money in the short term. The growth hasn't returned, and I don't know how much competition is still weighing on it. I'm just going to take this profit and run, and we'll put it somewhere else. And was I seeing that opportunity somewhere else? And I was. So I thought I'm seeing a better opportunity where right now I think it's Starbucks at $99. I see another stock out there that at its current price, I believe in the next 5 years would outperform it. So why not allocate that money into a better place? And that's what I did. So with all those factors in with Starbucks, with the premium that it's gone to already, the short-term jump that it's had already, not being able to buy shares where I want to buy them, competition, and also slow growth and not even returns to that growth yet, I just thought, take the profit off the table. And then I moved it into the stock that I'm seeing the kind of better opportunity there. And when I was running the numbers, look at the numbers of Starbucks here. At 20 times earnings, I'm just not seeing the upside. Now, granted, if I change this to 30 times earnings, the year's more upside there. But like I said, I don't know if it's going to go to 30 times earnings because, in my opinion, if you're Starbucks and you're growing 6%, going forward, I don't think that's a 30 times earnings business. So I saw the position, and the one that I did buy is Google. I did put 90% of my Starbucks position into Google. I kept 10% just on the side for cash for maybe some other reasons, to buy another stock or what have you. I just didn't want to go full in, but I put a lot of it into Google. And Google for me is cheaper. 22 times earnings for Google, a lot cheaper than what Starbucks is. Granted, obviously not as much of a dividend, but you're still receiving a dividend. But when I look at Google, all I look at is, in my opinion, the last earnings from Google were 10 out of 10. Starbucks' last earnings was probably like a 2 or a 3 out of 10. Google's was 10 out of 10 in earnings. Like, this is growing 13% year over year. I think Google will comfortably grow 10% year over year. If they can do 13%, that's absolutely amazing. Mega EPS beats, mega revenue beats, as you can see here. And when you look at Google, there's so many parts of this business. You're not just getting a coffee chain, you're getting such a big moat. Google search, very hard to disrupt. YouTube, very hard to disrupt YouTube. Everyone said TikTok was the killer, and look how that's worked out. Google advertising, Google Cloud, which is also coming a profit beast in the next 5 years. And more than likely, I think Google has the more predictable double-digit growth, growing double than what Starbucks is. But yet, when you look at Google, it's trading at currently, so it normally trades at 28 times earnings. On a forward basis, this is now going to grow at 17 times forward earnings. So this is, in my opinion, a more premium, faster growth company, a bigger moat company than Starbucks. Yet Starbucks is 27 times earnings and Google 17 times earnings. And Google, in my opinion, has a bigger moat. And also the growth will be probably double. In my opinion, I can safely say that I think Google will grow double than what Starbucks is. And that doesn't make sense. Google right now looks such an attractive opportunity for me, especially when I compare it to something like Starbucks. And I thought my money in the next 5 years will perform better in Google than what Starbucks will do. And the other thing with Google is that it's got a cracking balance sheet. It's probably the best balance sheet out there. Profitability wise, they throw more profitability. The profit margins are a lot more bigger. Balance sheet wise, it's a better balance sheet. They've only got 3% debt on the balance sheet compared to Starbucks that's a lot higher. That enables them to do a lot more with the cash, which they are doing with the cash, with the dividend, the share buybacks. The share buybacks are insane on Google. Look at the shares outstanding, especially from 2019. The amount of shares that they're buying at the moment, the share count is coming down massively. They're buying back more shares. As a shareholder, you're owning more of the business. That's improving the EPS. That's why we're seeing at the moment the company trading around about 17 forward times earnings, and maybe people are a little bit slow to kind of, pick that up. And then when I look at the concerns around Google, the concerns I have around Google are a lot less than Starbucks. With Starbucks, I don't know if the growth is coming back. I think the valuation is rich. I don't know about competition. The only issue that I have around Google is what the DOJ could potentially do to them. What are they going to potentially do to the company? I don't know. Maybe there's always some sort of concerns going on around Google, and that will always happen when you're in a position like Google and the size of Google. There'll always be some sort of issues, and some of these issues take years to resolve. But realistically, the worst case outcome of Google, do they break the company up? Do they have to maybe sell off a part of the business? Whatever happens, I think you'll be okay as a shareholder. If the company is separated, you're still going to own all of those businesses, and you'll get whatever it is split off into stock, whatever it is. You'll probably still get the fair valuation, and you'll probably even get more. If you imagine if YouTube is split up from Google as a company, and people are now able to go buy shares in YouTube instead of Google, and you can get your choice, that's probably going to lock even more value or unlock even more value for Google. If they're having to sell off part of the business, let's say they get told, "Oh, you got to sell Google off, by the way." Now, if you got to sell YouTube off, by the way, imagine like the companies that will be desperate to get hold of YouTube, and there's going to be loads of companies that will be after, buying YouTube. And think about, if someone buys it up, the premium that they'll have to pay for that. And then when they get paid it, what they're going to do? Well, they'll probably neutralize it by, buying back the stock from the profit they'll have to sell off from YouTube. Whatever the case is, and the worst case scenario, I actually see it being even more of a positive for Google. So the biggest threat that I see out there is not really a threat at all for Google. And the combination of that, I personally think the moat's bigger, the growth's more than likely going to be better, the balance sheet is better, the share buybacks is better, and from a valuation point of view, I didn't think we'd see Google trading at like 17 times earnings, forward earnings again. Like the lowest that Google has ever traded at in the last 10 years is 17 times earnings, and you're going to be there in 12 months time, very, very quickly. And I think that's a good opportunity. I think Google, in my opinion, is probably in the top 3 businesses in the world right now. And if I have a chance to buy one of the top 3 businesses in the world right now, at very close to its historic valuation for the last 10 years, I'm going to take that opportunity. And unfortunately, Starbucks was the collateral where a few things weren't making me a little bit nervous, and I had an opportunity, and I was looking at it thinking, well, where can I get big amounts of cash to kind of buy this? And obviously everything that was going on with Starbucks in the last kind of couple of weeks where it's had its big run up, I thought that's the one. That's the one that makes sense for me to kind of move on here. So yeah, I thought, normally I do these videos at like the end of the month where I do the, the US stocks I'm buying and selling. And normally I'll tell you on there that I've sold this stock and I bought this stock, but with such a big move in the portfolio, I thought I'd just tell you that obviously I've got rid of Starbucks now, nice bit of profit, quick profit, and then I've also extended my position into Google, which I always said, in my opinion, I'd really like Google to come a top 3, well, my top biggest holding if I can, and I never thought I'd get it at these prices again, and I am doing so. I am buying Google, obviously it's got a fair way to go to be the largest position, but selling Starbucks and putting it in Google has helped it and moved it up a little bit more to that kind of position where it could get there. We'll see what happens, but yeah, I thought I'd let you know that with such a big move that this is something that I have done, and I hope you enjoyed the video, and hopefully you can see my thought process around that. Anyway, so that's the video for today, guys. I'm probably not going to make a video on Saturday or Sunday unless something happens or I have a lot of free time, which I don't think I'm going to have a lot of free time actually this weekend. So if I don't see you on Saturday or Sunday, I'll see you on Monday for the video. If not, and you want some more content, obviously on the Patreon, I've just posted the US portfolio review, and then on Saturday and Sunday, I'm actually going to post another video on the Patreon, which will be a stock request, and we're actually going to be looking at Rio Tinto on the Patreon. So if you do want more content, then the place to be is on the Patreon. If not, I'll see you on Monday, guys. As always, hit the like button. If you're new around here and you found the video helpful, subscribe. If you've been a subscriber for a long time, watching for a long time, and you're not a subscriber, make sure you subscribe, guys. Get me to that 16,000 subs. Apart from that, see you on Monday, guys. Have a great weekend.